would you be able to share, one trade or one set of trades that you think really highlights your trading style?
Yeah, absolutely. So kind of like I mentioned, the pullback to VWAP is like one of my biggest things. So I want to share basically the importance of this indicator and how you can just use it to read information. And I think I have a really good intraday chart I can share with you guys to kind of like show you exactly what I'm looking for, kind of just what I described and how I've built nuances behind this in order to be specific with my entries and exits on the chart. So if we want to go into it here, have an intraday chart of QQQ. So very simple, kind of just at the open, we're really weak initially. And something I like to look for, like I said, like I don't like to trade that first 20 minutes because I notice I just don't have as much edge. Sometimes the markets are trying to find their footing in that first 20 to 30. So for me, I'm kind of just gathering information and data in this first 20 to 30 minutes. So in the first 20 to 30 on this QQQ chart, I'm noticing that first of all, there's two areas of confluence here. One is that level I have marked, that's prior day low. And so, kind of as a rule of thumb from data I've collected, it's like if we're opening under prior day low and we're consistently rejecting it and we can't even get above it, I'm like, okay, that's a sign of weakness. And then you pair that with the purple line here, which is VWAP. Ignore like the teal line, that's just like a period moving average, but it's just like a momentum indicator. Sometimes I have that up. That's my only other indicator I have, but it's like, don't worry about that. The purple line is VWAP. So we're consistently rejecting prior day low, and we're consistently staying under VWAP, and we can't really close above it or even really get that close to it at all. So I'm like kind of gathering this information and that data the first 20 minutes, like I said. And there's a big thing for the markets that I've noticed where if we make fresh highs or fresh lows past 10 a.m. Eastern Standard Time, or on my chart here it's 7 a.m. because I'm on the West Coast, you generally want to trade in the direction of the break. Now, always this isn't an always thing, so it's like everyone out there will be like, "Oh, you said to do this," but it's like generally this is something I've noticed because we'll have like news data come in, and this will be a catalyst to kind of maybe push one way or another and see which side of the tug of war kind of wants to go one way or another. So, like I said, I've already collected all this data so far the first 20 to 25 minutes where it's like, okay, we're staying under prior day low. We can't even get above it. We're rejecting VWAP the whole time. So now into 7 a.m., we get a little pop and we can see that buyers are attempting to push us higher. And we get the push above VWAP there, but we get another close. As I kind of like annotate here, it's like we get the push into VWAP, but we can't get above it and we still close below it. So here is an area where I'm like, okay, we got another rejection of VWAP, another rejection of prior day low. It's 7 a.m. This is a good area to establish a short position. Get short, putting my risk simply just basically right above like the high of that candle and taking the short and looking to take it into low a day and then potentially a break lower. So pretty much that's what happens here is, you can take the short right after, like probably around like 7:05, put your risk above the candle that popped into the highs there. And then I like to scale out. That's kind of like a big part of my trading is I'm scaling out of my position. So I'm always covering some into low a day because especially with the futures markets, is like they love to get like really close to low a day or like barely like overshoot. And that is something where I'm like, I just want to put money in my pocket to be like, okay, like I've locked some in of this trade. So it's like I always would cover some into the breakdown right here to cover some no matter what. And then one of the systems I've been trying to build with momentum is what's called like a 2-minute trailing stop system. And I've gotten this from my mentor. He's actually helped me a lot with this, where as you can see on this chart, we're pushing down in like a very simple rule of thumb is you just let those runners run until you get a break of the previous candle high. So in a downtrend like this, it's like there's never a candle that gets above the previous candle high until this last one at the end where it says 2-minute trailing stop and I have the arrow. It's like, yeah, I kept going down a little bit more, but that candle would have ticked me out. So ideally, that's kind of where I would have exited.